Let's get some business news for you now. Kate Moody is with us in the studio. And Kate, America's central bank has raised interest rates, a sign that the economy is improving.
That's what they say. Anyway, it's the second time this year, only the seventh such hike since the end of the financial crisis. The Federal Reserve raising that basic federal funds rate another quarter point, which puts it in a range from 1.75 to 2%. It had been brought down to support lending and spending during the global financial crisis. But officials say they've seen a gradual strengthening in the economy, inflation and unemployment. And as you can see there, that interest rate has followed suit. The basic rate, of course, is what banks across the country charge each other. So it guides lenders across the country. So as interest rates rise, so do borrowing costs. That affects credit card, car and mortgage payments, as well as higher savings rates. The outlook is fairly positive, the bank saying that it sees the economy growing at a solid rather than a moderate pace and indicating more gradual increases for a total expected of 4 moves throughout 2018. Take a listen.
History has shown that moving interest rates either too quickly or too slowly can lead to bad economic outcomes. We think the outcomes are likely to be better overall if we are as clear as possible about what we're likely to do and why.
Chief Jerome Powell also saying there would be more frequent press conferences under his leadership in an effort to make the Fed's analysis more transparent to the American public. Now for more, let's cross to Michael Ben-Gad, Professor of Economics at City University of London. Thanks for being with us this evening. Now that rate rise itself from the Fed, no surprise, but what stood out to you from the Fed statement this Wednesday?
Well, there was one thing that he did mention, which was that they're no longer promising to hold long-run interest rates at their current low level. Normally, the Federal Reserve doesn't have much of a direct role in long-run interest rates, but that all changed as a result of the financial crisis and quantitative easing. Now the Federal Reserve holds enormous quantities of long maturity government debt, and as it unwinds its balance sheet, it's looking for ways, well, as it sells it, that means that those rates, which are much more important actually than these overnight rates that everybody's focused on, those interest rates are likely to rise, and they're likely to rise for another reason, which is that the U.S. government's budget deficit is also increasing. So at the same time as the Federal Reserve is selling its long-run bond holdings, the Treasury is creating new bonds and selling them to the public.
Now, Powell declined to comment directly on the trade tensions that have engulfed the U.S. and its traditional allies. He characterized it rather vaguely as a risk. Does that seem accurate to you?
It doesn't surprise me that he doesn't want to get into this controversy. I think that if you took a poll of all of the economists who work at the Federal Reserve, across all the 12 regional banks, as well as the Board of Governors, I doubt you would find a single economist who is in favor of a trade war with either Canada, Mexico, or the European Union. Again, he's choosing not to pick a fight with Trump, but he's certainly not about to endorse these kinds of policies.
Remind our viewers, if you will, why all of this matters. How does the central bank's federal funds rate affect our daily lives?
Well, it does so only indirectly. The federal funds rate is the rate at which banks borrow and lend to each other overnight. They are required to hold a certain amount of reserves, and if they fall short, they can borrow and lend from each other. It feeds somewhat over time also into retail interest rates on credit cards, interest rates on car loans, and to some extent, it will also have an impact a bit on long-run rates over the long term. It's the long-run rates, the rates at which businesses borrow, or for example, people borrow in order to buy houses. Those are the things, those are the interest rates that in the long run really have an impact on the economy. And those, as I said, those things, those interest rates are likely to start rising as well, again, as the central bank, as the Federal Reserve begins to unwind its enormous balance sheet. It also wants to do this in part because the banks themselves, private banks, hold enormous excess reserves. Typically, you had a few $1 billion in excess reserves across the entire system prior to the crisis. Now you have over $2 trillion worth of excess reserves. That's gradually coming down, but there's a long way to go. If that doesn't come down, and what the bank really wants to do is to keep private banks from turning that into credit, because once they do that, then the money supply will start to rise very rapidly, and that's how you get inflation.
Now, we're also going to be hearing from the European Central Bank on Thursday. Is this tightening of monetary policy in Washington likely to be reflected across the Atlantic?
Well, the European Central Bank is operating with a bit of a lag. So the Federal Reserve stopped its bond buying program and started to unwind its balance sheet back in the autumn. And the ECB has just reached the point where it's about to start doing the same thing. It's not clear whether they will, at this moment, raise interest rates, but in the long run, of course, they will. The interest rates that we have now are very close to what we refer to as the zero lower bound. That's not a place where most central banks wish to be. I would imagine that the only reason they might not follow suit is because of some uncertainty regarding Italy and its government. So they might decide to postpone interest rate hikes to the next, perhaps by a month.
All right, Professor Michael Ben-Gad, thanks so much for that insight from London. Now, the stock markets had broadly been pricing that move from the Fed in, although we have seen some movement. The dollar has risen slightly, Wall Street moving a bit lower, then rebounding since the decision was confirmed. The Nasdaq still leading up about 1/3%. Earlier, it hit a new intraday high, boosted by media firms like 21st Century Fox and Netflix. Their shares have been rising after a U.S. judge granted permission for AT&T to go ahead with an $85 billion deal to buy Time Warner. It was a fairly muted close for the major European indices, the Frankfurt DAX and Milan FTSE, both ending the session slightly above the flat line. Volkswagen has been fined €1 billion by German prosecutors over the Dieselgate scandal. The auto giant said it had accepted the fine and would not appeal, and that the payment would mark a step towards overcoming the crisis. It's one of the biggest fines ever imposed on a German corporation. VW has already paid billions in fines and compensation for drivers in the United States. The company admitted in 2015 to fitting 11 million diesel cars worldwide with emissions cheating software, putting the spotlight on the broader industry and its environmental impact. Now, our sports team has been bringing us all the latest on the World Cup ahead of the kickoff on Thursday. But the most watched sporting event in the world is about more than just the beautiful game. It's also an economic opportunity. Hundreds of thousands of visitors are arriving from around the world, ready to support their teams and give a much-needed boost to the Russian tourist industry. Aaron Ogunki has more.
Artisans at this souvenir shop are working around the clock. Ahead of the World Cup, they've added a new twist to the classic Russian matryoshka dolls. Messi, Ronaldo, Neymar. The artists are adapting tradition to soaring demand for World Cup souvenirs. Shoppers at this market say the football-themed dolls are already a success.
It's the World Cup, and this is my favorite player. So yes, it's a great idea for a souvenir.
Workers in the tourism industry across the country say they'll benefit from the international tournament, both in terms of profits and when it comes to making their towns known to visitors from all over the world. Here in Bornikovo, artisans have combined traditional stone sculptures of bears with footballs.
The bear is the symbol of Russia, and we want to show the entire world that it is a kind, athletic and competitive animal.
But the World Cup goes beyond showcasing Russian culture. More classic souvenirs, jerseys, footballs and stuffed animals now fill stores across the country.
We are coming from England, so England is a football anyhow, okay? So we come to looking for some T-shirts here for souvenir.
But economists are less enthusiastic about the effect of the World Cup on the Russian economy. According to credit agency Moody's, the limited duration of the competition means its long-term impact on the economy may also be limited.
There you go. Lots at stake both on and off the field, Laura.
Absolutely. Kate, thank you very much indeed. Kate Moody there with the business. We're taking a very short break. Don't go away.